Good morning, everybody. We are going to learn what is auditing, what is audit, and who is an auditor. Obviously, an auditor can be a human being. Auditor can be a specific person. But what does an auditor do? How can we understand who will be an auditor? Can a person who prepares the books of accounts be considered as an auditor? Or any person who prepares the financial statements can be considered as an auditor? Can a person who is trained to act as a legal advisor be considered as an auditor? Or a person who is authorized to give judgment or legal matters, can we consider him as an auditor? Or any person who probes into something complex and which is hidden and learn the actual facts, can he be considered as an auditor? A person who does audit is an auditor, or a person who is doing the auditing work is an auditor. Let us try to check out and make out who is an auditor. In this picture, we can see the lady is trying to calculate and finalize accounts. Can this be considered as auditing? No, it is accounting. In this picture, we can see the lady is noting down transactions. She is seeing the invoice and noting down the transactions in the books of accounts. Can we consider this to be auditing? No. This is bookkeeping. When the transactions are systematically recorded in the books of accounts, we call that as bookkeeping. What is this person doing? He is suspecting something. Can this be considered as auditing? No. The work which is being done in the picture of suspicion can be done by Sherlock Holmes or by a detective. It is investigation. What do we see in this picture? Can we consider this to be auditing? The person seems to advocate. He is a lawyer. He is not an auditor. What do we see in this picture? Can we consider this to be auditing? The person seems to give some verdict. He is a judge. He is giving some judgment. Auditors are not judges. Let's see what is happening in this picture. The person seems to examine, check, or verify some documents. When a person checks, verifies, or examines, or analyzes, or makes an inquiry into some financial records, financial documents, to ensure whether the financial statements which have been prepared give a true and fair value, we consider that to be financial audit. So the person who does this type of auditing work can be called as auditor. So this picture denotes that this is auditing. When any verification, examination, or checking is done of financial documents for the purpose of giving an opinion, we call that to be an audit. Specifically, it may be considered as a financial audit. The word audit was derived from a Latin word called audire. The literal meaning of this word referred to listening or hearing. Thousands of years ago, audit originated from kingdoms. Kings wanted to know what is happening in their countries, and therefore they appointed some spies, some ministers who would go to each and every place, to different places around the kingdom, hear what is happening, and they would report this to the kings. This is how auditing originated. Audit, for the purpose of auditing here, refers to examination, inspection of documents, or observation of what things are happening. It may be checking. It may also include control over what is happening and how it has to happen, verification, and it can be some in-depth inquiry. So all this is included in what we call as audit. Now, before we try to understand what is audit, who is an auditor, and what is auditing, we need to clarify a certain terms. Many a times student gets confused with certain other similar words like bookkeeping, accountancy, auditing, and investigation. Students always get confused and consider these terms to be overlapping. So let's clear the confusion and let's try to understand what is the specific meaning of all these terms. Bookkeeping, accountancy, auditing, and investigation are all different terms. Let us try to understand the difference between these terms. So bookkeeping is a narrow term, or the scope of bookkeeping is narrow. Bookkeeping can be considered as the first stage. Whenever a transaction happens, it is recorded systematically in the books of accounts. Bookkeeping refers to recording business transactions in a systematic manner in the books of accounts. It ends with journalizing and posting to the ledgers. Accountancy is a very wide term. It has a wider scope. It starts with recording, that is bookkeeping, and it further continues. Once the business transactions are recorded, they are classified under different groups, which we may also in other terms consider as posting to ledgers. Thereafter, a trial balance is prepared. We may consider this to be summarization. Once the trial balance is prepared for the purpose of checking the arithmetical accuracy, other two statements, which we call as financial reports, are prepared. Profit and loss account is prepared to ascertain the profits. Balance sheet is prepared to ascertain the financial position. Does accountancy end with this? Not at all. Accountancy still continues. Once the profit and loss account statement and the balance sheet statement are prepared, thereafter analysis and interpretation of these statements is done to come down to some conclusions, to make some future decisions. So all this is included in accountancy, and therefore it has been considered to be a wider term and it has a wide scope. Bookkeeping can be done by any person. But in case of accountancy, only an accountant can do this work, because in case of bookkeeping, the work is clerical in nature, and accountancy, a person needs to be analytical. So accountancy is analytical and bookkeeping is clerical in nature. As we discussed, bookkeeping needs to be done first. As soon as the business transaction takes place, immediately it needs to be recorded either in journal or subsidiary books, and thereafter transferred to other set of books which we may call as ledgers. After the books are prepared, thereafter the financial reports are prepared. Therefore, accountancy is considered to be the second stage. Once the bookkeeping ends, the accountancy starts. As we have discussed, in case of bookkeeping, the work gets completed once the books are recorded. Once the transactions are recorded properly in the books of accounts, bookkeeping comes to an end. But as we have discussed, accountancy still continues till we ascertain the final results. That's the major difference between bookkeeping and accountancy. So here, in case of bookkeeping, two main records are recorded. That is, one is journal and the other is ledger or subsidiary books. But in case of accountancy, financial statements like profit and loss account, balance sheet, cash flow statement, all these statements need to be prepared. Now let's try to understand the difference between accountancy and auditing. As we have discussed, accountancy is different from auditing. Accountancy deals with collection of data, classification of data, summarization of data, concluding making some important conclusions, making important decisions. All this is covered in accountancy. But auditing is examination of these results which have been prepared through accountancy. The financial statements which have been prepared by an accountant needs to be critically and analytically examined. That is what we understand by auditing. Accountancy comes to an end on preparation of financial statements, but auditing comes to an end on preparation of an audit report. Auditor prepares a report giving his opinion. The opinion is whether the financial statements show a true and fair value of the financial position and the profit so ascertained. It is an opinion whether whatever recorded in the books of accounts, the financial statements are prepared on that basis and they are correct. Accountancy is a continuous process. As and when the transaction is met, accountants will have to keep a record of it. They will have to prepare summaries, they will have to prepare trial balance, they will have to prepare the financial reports, and it goes on. As long as the business goes on, accountancy also needs to be done, and it needs to be done as a continuous process on a daily basis. As and when the transaction take place, records need to be maintained. Auditing starts once the accountancy stops, or auditing needs to be done after the accounts are prepared. Usually, every year, all the transactions which have taken place needs to be recorded on an annual basis. Once the accounting year is completed, the final financial statements are prepared. These financial statements needs to be verified, examined, and checked by the auditor. Therefore, once the financial statements are ready, auditing can start. Who can become an accountant? A person with a commerce graduation can become an accountant. There is no specific qualification which may be required. A person who is competent enough to prepare accounts can be considered as an accountant. But in case of an auditing, a person who is qualified and who is a practicing chartered accountant only can become an auditor. No other person can become an auditor. We will further be understanding that auditors can be internal and external. External auditor needs to be a practicing chartered accountant. In case of accountancy, the management appoints the accountants. Accountant may not be an independent person who has to do the accountancy work for an organization. But in case of an external auditor, in case of a statutory auditor, an auditor needs to be independent. He cannot be an employee of the organization in which he is working. He cannot be indebted to the organization in which he is going to audit. This is what we understand by independence. An auditor is usually appointed by the shareholders in the general meeting. An auditor may also be removed in the annual general meeting by the shareholders. But in case of an accountant is always appointed by the management, by the owners of the organization. Accountant, as we discussed earlier, is an employee of the organization, but auditor is an independent, separate person and not an employee of the organization. Accountancy does not give any assurance to the users, but once the books of accounts have been audited, it gives a proper and high assurance, but not absolute assurance to the users. Accountancy usually provides us the financial information. We come to know how much is the profit, what are individual expenses, what are the incomes, what are the assets and liabilities, what is the value of each and every asset and liability. All this information is provided by the financial statements which are prepared by the accountants. While audit is done, audit actually gives a creditability, and after verifying the financial statements. So this may be considered as verifying function, and it gives creditability to what has been done by the accountant. In case of accountancy, the transactions are not verified by anybody. They are not examined and checked by anybody. But in case of auditing, each and every transaction which is recorded in the books of accounts, the auditor ensures that each such transaction is backed with some document which is a proof or an evidence for that transaction having been done. So auditing always verifies the evidences, but in accountancy there is no verification of the transactions. Accountancy is usually based on the accounting standards which are set by Institute of Chartered Accountants of India. Auditing is based on auditing and assurance standards which are also prepared by Institute of Chartered Accountants of India. Having learned the difference between accountancy and auditing, let's now try and understand what is the difference between auditing and investigation. Auditing, as we have learned, it tries to ascertain the truth and fairness of the financial statements. Investigation may always not have the same objective, may not have the same purpose. The investigation, the purpose for which or the objective with which the investigation is done may be different always. It depends on who the person, for what purpose he wants to investigate. So the objective will differ every time and it may not be the same objective. So the scope, depending upon what the objective is, will differ. Auditing, as we have discussed, is always a critical examination. In case of investigation, it is not only examination of the financial reports, of the financial statements, but it may many a times be a in-depth inquiry in identifying some frauds, some specific facts. Investigation may be done for many different purposes, not only to give an opinion whether the books of accounts, the financial statements show a true and fair value, but it may be for many different purposes. It may be to identify what frauds have been done, who has done those frauds, how these frauds initiated, and so on. The objective of investigation may be different every time. Auditing takes place as soon as the financial statements are prepared. Once the accounting is done, auditor starts the audit works. Usually, in case of external audit, once the financial statements are prepared, auditor starts auditing. He may sometimes have test checking because it may not be possible for him to go through, verify, examine each and every transaction. So from the test examination or test checking, he may come to a conclusion that the financial statement so prepared from the sample checking what he has done seem to be correct. So usually this continues for a maximum period of 1 year, which may extend up to 15 months. But in case of investigation, depending upon the purpose for which the investigation is done, it may last for many years, or sometimes it may end up within a week or so. So investigation, there is no specific time period, but in case of auditing, usually audit needs to be completed before the final date of filing the returns to various tax authorities, and therefore the time period for auditing is limited to 1 year or maximum 15 months. In case of auditing, the objectives are general. Every time an auditor needs to examine and verify the financial statements and give his opinion on these financial statements, whether they show a true and fair value of the transactions which have been shown in the books of accounts, whether they relate to the financial statements which have been prepared, and so on. But in case of investigation, the objective may be different. It may be specific every time. The purpose for which the investigation is done may be different. Sometimes the investigation may be done to find out if there is any excess expenditure happening, which may not be the same objective every time. So in case of investigation, the objectives differ from time to time depending on who wants to investigate. Sometimes it can be the government, sometimes it can be the creditors, sometimes it can be the shareholders, and so on. The objective will differ depending upon who initiates the investigation. In case of auditing, the auditor always relies on the evidences. He relies on the explanations given by the management. Therefore, it can be considered as a persuasive evidence. It may not be considered as the final. The auditor always relies on what the management says if he is not agreeing to what the documents say. But in case of investigation, it cannot be concluded based on the factual, based on the documents. probing is done, more inquiry is done, and the actual facts are identified, and therefore investigation is based on conclusive evidences. Auditing, as we have earlier also discussed, is based on the auditing and assurance standards. There is a set of principles which the auditor needs to follow. But in case of investigation, it is a detailed scrutiny and checking, and it may differ every time depending on for what purpose the investigation needs to be done. No specific principles or standards need to be followed in investigation. Investigations can be done by detectives. Investigation can be done by any competent person. Investigation can be done by police, depending on what the case is, for what purpose the investigation needs to be done. Auditor usually does this work of giving an opinion of and as to what the financial statements tell. So this report needs to be given to the shareholders. But in case of investigation, depending on who has initiated the investigation, the report needs to be given only to the person who has originated this investigation. In case of auditing, most of the cases, auditing external audit or external auditing is done for all the companies under Indian Companies Act of 1956, and therefore the report needs to be given to the shareholders. Auditing may always not be full and complete every time. Each and every transaction may not be checked and verified depending upon how the internal control system is, whether the internal audit system is in place. The auditor may take up a decision to just check a few sample transactions, which we may call as test checking. But in case of investigation, test checking is not allowed. 100% checking needs to be done. Scrutiny needs to be done for each and every transactions. Additional probing also needs to be done, and therefore investigation or the report prepared based on the test checking is not allowed in investigation. Full-fledged and complete checking needs to be done. As we have earlier also discussed, auditing is an annual feature, but in case it needs to be done every year. In case of public limited companies, a statutory audit needs to be done, or it is compulsory, and it needs to be done for every accounting year. So it is an annual feature. But in case of investigation, only when some suspicion arises, investigation is initiated. So it is not an annual feature, or it is not a regular feature. It may sometimes be done, and it can be done not only for a specific purpose, not only under a specific law. It can be done under any other law other than Companies Act and so on. Who can do this auditing work? It can be only practicing qualified chartered accountant. The educational qualification required for an external auditor is a qualified chartered accountant. However, we'll be learning different types of audit, and under that we will learn that there is something called internal audit. In case of internal audit, the management can appoint the auditors. When the management appoints auditor just to check and verify whether whatever work is performed by the accountant is right, it is in accordance with the accounting policies, it is in accordance with the various acts, with the provisions of various acts. In order to check this, the management may appoint internal auditors. So these internal auditors may not have the qualification of a chartered accountant. If they're competent and if they have some experience and if they can check and verify the work of accountant, then they may be not qualified as a CA. But in case of external auditors, in case of statutory auditing or statutory audits, always practicing chartered accountants need to be appointed. In case of investigation, any competent person, maybe Sherlock Holmes, who is a detective, maybe a policeman, or any other person who is competent to identify, to probe in, to verify and check and find out what the actual fact is, can be considered for the purpose of investigation. Having learned what is bookkeeping, what is accountancy, what is auditing, and what is investigation, let us now summarize what we have learned till now. So we have learned these four terms: bookkeeping, accountancy, auditing, and investigation. For us to have a clarity on what is auditing, we must know what is the difference between these four terms. Who does the work of bookkeeping? Any person who can do the clerical work can do bookkeeping. It is just recording the transactions in the books of accounts in a systematic manner. So any and every person who has the basic knowledge of accountancy can be a accounting clerk, and he can do the job of bookkeeping. Who can become an accountant or who can do accountancy? Usually a person who is a graduate and who has some experience is appointed as an accountant. So usually senior accountants do the job of accountancy, because it is not only recording the transactions but finalizing the accounts and thereafter coming to some important decisions. So it also includes decision making, and therefore accountants need to have some experience, need to have some technical knowledge, and therefore graduates with some commerce degree may be selected or appointed as accountant. Who can become an auditor? In case of external audit, it can be only a practicing chartered accountant. No other person can be appointed as an auditor. Who can investigate? Investigation is usually done by detectives. So any person who is competent to make such inquiries can be considered for the post of investigator. As we discussed, bookkeeping requires only clerical knowledge, and therefore any person who has cleared his +2 can become an accounting clerk just to record the transaction. As we discussed, BCom or similar graduation like BBA would be considered for appointing an accountant. In case of an auditor, always it has to be a practicing chartered accountant, no other person. In case of investigation, as we discussed, any person who is competent to do that job can be considered. What is the nature of the work? Bookkeeping has a clerical nature. Accountancy has an analytical nature, because we have to analyze and thereafter we have to come down to some conclusions. Auditing is critical examination. So we need to verify each and every transaction, and thereafter we can come to a conclusion, and thereafter we can give an opinion on as to whether the records which are maintained, the final results which are prepared, are true and fair. In case of investigation, it is a type of suspecting something, and it needs to be a suspicious type of job. Bookkeeping is just curtailed to recording of transactions. We need to record transactions in the books of accounts usually in subsidiary books, in journal and in ledger. But accountancy, we need to prepare financial statements. Usually, three financial statements need to be prepared by the accountants. The first is profit and loss account statement, balance sheet, and thereafter yet another statement, which is a statutory requirement these days for the companies, and it is cash flow statements. So these are the final reports which need to be prepared by the accountants. In case of an auditing, the entire process of auditing is done to give the opinion to the shareholders, and we call that written statement which is prepared by the auditor as an audit report. In case of investigation, depending upon what the objective is, a report needs to be prepared and needs to be submitted to the people from whom it has been initiated. So this was the difference between these four terms: bookkeeping, accountancy, auditing and investigation. I am sure that all would have now got cleared with these four terms, and there is no confusion, and the understanding of these four terms is better now. We also discussed the three terms: audit, auditing and auditor. So let us understand what is audit. Institute of Chartered Accountant of India has defined the term audit in this manner. Audit is an independent examination of financial information. Independence here refers to an auditor needs to have or take an unbiased, he has to give his opinion, okay, without any pressure. So a person who is employed in an organization usually has to obey to what his boss says. But in case of auditing is not dependent on anybody. He is a third party. He is not connected to the organization in any manner. That is what we mean by an independent person. So audit is an independent examination of financial information. As we are now studying and trying to understand the meaning of the definition of financial audit, it always is examination of the financial information. That is the books of accounts which are maintained, the financial reports, that is the financial statements which are prepared, so of a specific entity. So such an entity can be a sole proprietorship organization, it can be a bank, it can be any government department, it can be a public limited company or a private limited company. So any organization which is either profit oriented or not, okay, which is making some profit or which has been set for the purpose of earning profits or not, audit can be done for both the types of organizations. There are certain organizations which are set, usually some government organizations are set for the purpose of offering some welfare services to the people, and therefore those organizations also audit can take place. Audit can be done for any type of organization. So there is no specification that it has to be done only for large firms. As we discussed, it can be for a sole proprietorship firm, which is a very small petty shop, or it can be for a huge public limited company. When such an examination is conducted with a view to express an opinion thereon, usually audit is done for a specific purpose, for a certain objective. In case of public limited companies, the owners are different from the management, and therefore the owners need to know what is actually happening into the company, and therefore as per Indian Companies Act 1956, audit is a statutory requirement, is a compulsion. Auditor is a third party who is appointed to check and verify whatever the financial statements which have been prepared show a true and fair value of the financial positions, of the profits which are ascertained, and so on. They are in confirmation with the existing laws. They are in confirmation with the accounting policies, and so on. So based on this, the auditor needs to give his opinion in writing, which we call as an auditor's report. So audit here refers to examination of the financial statements in order to give his opinion thereon in writing in the form of auditor's report, wherein he states clearly as to whether the accounts so maintained and prepared by the organization show a true picture. So, audit is a noun. When this audit is performed, we call that as auditing. That's the major difference between these two terms, audit and auditing. Audit is a noun and auditing refers to the process, okay, of audit. So it is a verb. The person who does this work of audit, or the person who is auditing, is an auditor. So this is what we had learned. We learned the four specific terms: bookkeeping, accountancy, auditing, and investigation. And we also learned what is audit, what is auditing, and who is an auditor. Thank you.